Good evening, ladies and gentlemen. Welcome back to Walk the Block. We are all navigating digital finance together. I am your host for this evening's Zenith, and I am joined by our excellent cast and crew tonight. Up first, we got Mr. Dave Northall. How you doing, buddy?
I'm well, sir. Well, sir. Glad to be here. Glad to be back.
Absolutely.
It's been a couple Mondays off, so glad to get back in the swing.
Yeah, for sure. The last one was me losing internet. Well, my whole town losing internet and cell phone. That was very fun.
Ooh,
But
that sounds
we're
like a brutal time.
yeah, but we're beyond that now.
I,
We also have Agent J with us here tonight. I think he
you're
is
muted,
muted.
brother. You're muted on the website. There you go.
I gotcha. There we go. I am doing fantastic. Long time no see, fellas. Was it been less than 24 hours? It's been a hot minute.
That's true. That's also not even including your stream earlier today.
Mm-hmm.
Yeah. That's what I was gonna say. If you ever want to catch me and Jay, we are on the streams daily over at Degen Roundtable. 9:45 market open. It's good times.
Yeah.
The morning commute show for some folks over on the West Coast there.
That's right.
Yeah.
True. And last but not least, we are joined by our good buddy Tracker. How we doing, my man?
Doing good, doing real well. Yeah, that was a good stream today, this morning. Yeah, those emergency streams are starting to become a regular. Just it's not even emergency streams; they're morning streams now at this point.
Mm-hmm.
So yeah, good stuff. I mean, a lot of alpha in there. You want to stay connected. That is the show to get connected to. This is a great show here, kind of a macro take and kind of keep you guys up to date on the latest and greatest every week. But the daily shows on the D's Roundtable, it's going to have you more closely connected on the dailies.
There you go. Speaking of that morning show, gents, shall we kick off the show tonight talking about some market updates? I know, Jay, you and I tore up the charts pretty good yesterday, but I think today was actually a pretty interesting day for one of the theories that we hatched last night.
Yeah.
So if you're ready, let's pull up them charts.
Yeah, absolutely. We were short-term bullish, and we speculated that on a balance of probabilities, price is probably going to keep pushing upward and look for new highs. And we got confirmation today that the bulls are still trying to push price up. I would say, based on local structures, we're just going to go over the 4-hour charts for today and just the higher probability scenarios for both Bitcoin and Ethereum. But I would very much like if the bulls made one more lunge up before we actually get a larger correction downward. But to be quite honest with you, probability speaking, regardless of whether we are looking at a correction or a bullish structure and continuation of price to the upside, my base case, at least within the shorter time frames, is that we are going to try and look for another high before either getting rejected or continuation of the prevailing trend. So here we have the 4-hour chart on Bitcoin. Let's go ahead and actually go over the bullish scenario first. So the bullish scenario is a leading contracting diagonal with your 1, 2, 3 already in, and now we are looking for a wave 4. Now, you have an invalidation for your wave 4 sitting right here at the 84,447 level. The reason for that is because one of the main rules for a contracting diagonal is that in terms of magnitude, your 4 cannot be larger than your 2. And so if it extends beyond the 1-for-1, right, we're comparing the magnitude of 2 compared to 4. If it goes beyond the 1-for-1 fib, then that scenario is invalidated. But right now, we are currently safe. And so what's the target for our wave 4 to come in here? Well, if we toggle on our Fibonacci targets 4 to 4, right, that is taking a fib pull from the start to the end of 3. And for me in particular, it would actually be very nice if we found support here at the 382 fib, because you can see that we actually have some overlap with a daily point of control sitting at 85,851. You can see here on my chart that the 382 fib is at 85,775, which is a common retracement for your force. So it'd be very nice if we actually went down there, respected the daily point of control, found support at 382 before continuation to the upside into your wave 5, which would complete your initial impulse. We're going to look for a larger rejection downwards and then eventually head into our wave 3, hopefully at the very tail end of April to early May, getting close to the end of our current 60-day cycle. So that is the bullish scenario on the 4-hour chart. The bearish scenario Actually, not too different from the bulls. We have a WX. We are looking for a Y to come in. And in a Y is a zigzag because this entire structure, your WXY, is a double zigzag structure. And we're looking for the C of Y to come in. The targets for this particular bearish scenario to finish is between, or within, I should say, this target box of support between 89,636 and 90,341. The reason for that is not only do we have a weekly point of control sitting within that target box, we also have very common targets. Firstly, for your Y, a Fibonacci extension taken from the start to the end of W to the end of X. The 1-for-1 fib, which is a common extension for Y, is sitting at 90,347. And then also your targets for your C, taken from the start to the end of A to the end of B, is sitting at the 1-for-1 is a minimum target for us at 89,630. And so that forms the bounds of your resistance box there. So you have some major fibs sitting along with a weekly point of control within that target box. So very nice resistance to get rejected from. Also psychological level of resistance, right? $90,000 before heading down and continuing the overall prevailing trend and eventually taking out the low here at 76,600. I know that's not what people want to hear, but here at Walk the Block and at the DGen Roundtable, you always get a bullish and a bearish scenario. Now, in terms of time, we are actually taking a look for this structure to finish sometime around Wednesday, probably sometime in Tuesday or early Wednesday. You can see here that the C wave has already extended beyond the 2 fib time. And so the 3 fib time is our next target, which is around 5 p.m. tomorrow. And so ideally, we end the entire corrective structure around Tuesday, sometime late afternoon, early evening tomorrow, and then we take it from there. Whatever structure forms, if it's corrective in nature, then we look down. If it's reverse. If it's corrective in nature, we look for continuation to the upside. If it's impulsive in nature, then we look to keep heading and pushing price downwards. So that's what I have.
Why is that the case? I'm curious.
Very simple in terms of Elliott waves. And this is the case whether you're looking at moving to the upside or to the downside.
Right.
Currently, the prevailing overall trend is down, right? If we actually zoom out here to the weekly time frames, you can see that the overall prevailing trend is a downtrend. And so if we're going to look for continuation of this trend down, every single move towards the downside, you would want to see impulsive structures, right? Multiple 1-2s, that sucks. Multiple 1-2s, 3-4s, and 5s. Wow, my drawing tool really sucks here. You know, we're going to switch over to this, right? So you want to look for impulsive structures to the downside, something like this, right? That is indicative of continuation of the prevailing trend. However, if it's corrective in nature, right? If the move down is corrective in nature, then we're looking for trend reversals into the upside. And vice versa, right? If the prevailing structure is an uptrend and you want to continue for price to keep pushing up, then you look for impulsive moves to the upside. If the moves to the upside are becoming corrective in nature, and then you're looking for the opposite. Now you're looking for a possible shift in trend. Obviously, that's a singular indicator, right? Structure, but it is the most important structure, at least for the Elliott wave analyst, which I am predominantly an Elliott wave analyst. So that's the first thing that I look for. Structure is more important than price, which is more important than time. So that's kind of the hierarchy of importance in terms of the variables that I look at when I'm analyzing the chart. So structure, price, volume actually first before time. So structure, price, volume, time.
Copy that. Hey, thank you for the perspective. Appreciate it, brother.
You're very welcome. And that's what I have for Bitcoin. Z, do you have anything to add?
I do have a little bit to add myself. So for those that caught the show yesterday, one of the things that I was hoping to see to signal a more or single just a bullish move towards the upside is I was looking at our moving averages. So this yellow line that has been coming down for a hot minute, that is our 20-day moving average. The orange one above that is the 50, and this red line here going up and to the right, that is the 200-day moving average. Ever since we broke down for our cycle low here previously, we've really struggled to recover that 200-day moving average. We got above it there briefly on the 19th of March, but then immediately went back below. And we had our daily close for the candle 16 minutes ago, which is this green one right here, which also is a new cycle high on day 13. Yeah. That is the first confirmation above the 20-day moving average, which for me, that is one of those signals that the trend could start changing direction here. Obviously, our short-term trend over like 2 weeks is slightly up and to the right after our large dump there. But that is also in conjunction with our RSI continuing to move towards the upsides, and we're even getting a little more separation on it. So what's that telling me is that the relative strength index is starting to open up more, farther from the averages it's been staying at. The confirmation of the candle above the 20-day moving average is a confirmation of a full day of trading above that area, and it shows that we've effectively broken through that area of previous resistance, and now I'm hoping that we're going to go up and we're going to test the 50-day moving average. Might get rejected off of it and before we continue through it, but this was the first indicator that I was looking for a new bullish scenario coming here into the near future. So today was kind of a make or break day in my opinion, and it seems like it made it. Obviously, we now have to see if this is going to hold. If it's going to hold with this next candle coming out on the daily. So we got another 24-hour period to wait and see what's going to be going on. But overall, this is a good indicator for me. And I also think it's in conjunction with the S&P 500. Had a big gap on the market open today. And this one even came up and touched the 20-day moving average for the S&P 500. So it could be that Bitcoin is just moving largely with the total markets, but overall, looking at the crypto markets in particular, I do think that there's a very strong case that we're starting to see a bullish swing, at least for the cycle, if not maybe getting a little too optimistic here, but maybe even for the rest of the summer.
It's quite possible. I think $90,000 is probably going to be the first major point of resistance. I'm willing to bet we get rejected there at least once, retest some of the key supports that we have been forming over this particular range that we have created over the past week or so. And then with any luck, continuation to the upside, at least within this current 6-day cycle, right? Heading into late April or early May.
I would definitely agree with that. I think it would be healthy to see that we actually get some sort of respect with that 90,000 level, or what I had previously identified. I think it was like 90,700 something. Mm-hmm. But yeah, for shorthand, I just put 91.5 because that seems to be what was building as our area of resistance over the last 2 months. So
that was the bottom of the all-time high range, right? So
correct. Yeah. So if we can get up in there, as long as we don't hit it and then immediately shoot all the way back down, that would completely invalidate everything I'm talking about here. But seeing some resistance there, maybe a bounce, maybe a second bounce before proceeding towards the upside in those higher levels, that seems like very normal market activity. And that's the kind of thing that I'm going to be looking for here into the near future.
Mm-hmm. Yep.
Hey, Jay, Zenith, question for you, because I know me and Jay were talking about this and Dace as well this morning on the stream. Obviously at 90-day, not just a psychological level, but that used to be support. Now it becomes resistance. So that's going to probably be a place we get rejected first. There's also this downward channel that we're in right now. So we have downward pressure. What is your thoughts on the fact that this could be short covering, a short covering rally, basically? I mean, we're not going to know. I'm just curious to know if we had a way to determine if shorts were coming off and people are covering. Typically when you're covering for your shorts, you get these little relief rallies, and then the rejection at the next levels step in, meaning the shorts start to get put on heavily again. And once it gets to a certain level, I know it's kind of crystal ball. I know it is kind of a crystal ball, but Checker, thoughts on it?
Yeah, I actually had the open interest on Ethereum pulled up over the weekend. Jay, you probably remember on one of our streams. And I showed that our longs are staying steady at like 60-70%, and the shorts were slowly backing off. And so to some extent, especially at least on Ethereum, that is the case, that the shorts were backing off a bit to cover. And so that could be the case to some extent. I'm trying to pull it right now.
Yeah. So covering your leverage positions, either to the upside or to the downside as a very common behavior when it comes to trading. The degree to which they actually affect price action significantly, I don't quite know. I do not know if there is any data that I could pull or any analyst that does that particular scenario. So I wouldn't be able to parse that data, unfortunately.
Now, I know in traditional markets they do. It causes these relief rallies because the shorts are covering their positions. They're taking them off. Of course, you have to buy back in those positions because they were shorts. Then that causes a kind of a rally like you're getting. But it's one of those. It's. I didn't know if we had any other inside on-chain data since we have that kind of information. I know Dace, you brought it up, so that's good to know that that's happening. I know we talked about earlier today too that the central exchanges are starting to buy and accumulate. Certainly Bitcoin, maybe not Ethereum, but Bitcoin's been getting accumulated again. I know Jay and Dace brought that up in today's show, which was really good to hear. So and that tends to be, like you guys stated, it tends to be the beginning of what can spark, a reversal basically. Oh, you're on mute, Zena.
Thank you. I'll pull this up for a little visual aid for the folks at home. But what we're seeing is that over the 24-hour period right now, at least, there's more bullish activity than there's bearish activity, aka it seems that more longs are either staying or there are more shorts that are being taken off the market. If we look at what we got going on, it's largely split, but it does look like things are slightly in the bullish favor when it comes to a lot of the major exchanges going on here. But overall, I think that what you guys are talking about, I'm seeing it in the data here. We need more data to confirm further back in the past. But yeah, it could be that shorts are coming off the market and people getting ready for a move towards the upside. So as far as the idea of using short positions to covering their short positions, I don't know if I'm there. But I think that things are leaning more bullish than bearish right now. And that's at least what the data is telling me.
I would have to agree. I think short term, the bulls have been able to maintain the momentum. So, like I said, my base scenario right now, whether we're looking at either the bullish continuation or correction and then rejection back down, I think we make another lunge up towards that $90,000 area, get rejected at least once, and then we take it from there. If the structure is corrected to the downside, we look up. If it's impulsive, we look down.
Yeah. As far as the open interest on the market goes, we are seeing a slight uptick here, but overall we are much higher than we were pretty much in all of 2024, and we're lower than we were back in December and January when we made those new all-time highs. But yeah, overall the open interest is still much higher than any time in the market previously. That could also largely be attributed to the fact that there's just more ETFs and more exchange derivatives as well that are actually being traded and are able to be used by more people.
Z, see if you can throw my screen up when you have a second. If you're finished there, got one more detail on the BTC open interest. If you'll take a look here, like you said, this is showing what you just showed another way, right? So open interest climbs down here as price is climbing. This is your price on top. But if you zoom in here, we've got some divergence, right? These past, look, even just in the past, these are hourly candles, and so we've got really interesting two red, open interest coming down, price going up. That's an interesting sort of divergence versus what the very prevailing trend is in terms of the relationship between open interest and the price. So thought that was curious.
Definitely is. It's another data point to add and pay attention to. I guess the one question I'd have for you about the data that you're showing here is does the size of the candles that you're seeing on the chart concern you at all? Because it's data for sure, but at the same time, it looks like there are larger moves on both the Bitcoin and the open interest chart. And the ones that we're specifically identifying here are a good bit smaller than the rest of them. Does that concern you at all?
I mean, it's not that it concerns me. Like I said, it's a notable reversal of a trend in the price, whereas the interest continues to cut, right? We've got 1, 2, 3, 4. Obviously, like you said, we're on the hourly frames here, and so there's no doubt about it. We're talking about a short time frame. I'm not making a long-term suggestion, but on the hourly frames, it's an anomaly. And you see, we've got these big wicks here, right? And so price tried to continue to go down, and we'll see if there's a reversal here. It's another place that's showing those signs of the reversal that you were speaking about earlier. That's kind of what I would chalk it up to.
Fair enough. I like it. All right. Are there any other charts we want to pull up real quick? Or are we ready to start talking about the Federal Reserve?
No, we can certainly transition.
Let's do it.
All right, let's do it. All right, let me know if there are any issues, but I believe we should be good to go. So for the folks at home, this is the Federal Reserve press conference meeting that happened last week. We got Jerome Powell here, and this is our first question of the day. One of the major topics of the press conference was asking about tariffs and how that factors into the new data that the Fed released. They had a slight uptick in the possibility of inflation for the rest of 2025, and a lot of it was trying to figure out if the new tariff proposals going into effect on April 2nd are the reason for it. So with that being said, here we go.
Howard Schneider with Reuters. Thanks for your time. So two things on sort of the real side here, inflation and then GDP. How much of the higher inflation forecast for this year is due to tariffs? And since the policy path remains the same, are you effectively reading this as a one-time price level shock?
Okay, so how much of it is tariff? So let me say that it is going to be very difficult to have a precise assessment of how much of inflation is coming from tariffs and from other, and that's already the case. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariffed and what was not, very, very challenging. So some of it, the answer is clearly some of it. A good part of it is coming from tariffs, but we'll be working, and so will other forecasters, to try to find the best possible way to separate non-tariff inflation from tariff inflation. In terms of your sort of looking through question, too soon to say about that. As I've mentioned, it can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory, and that can be the case in the case of tariff inflation. I think that would depend on the tariff inflation moving through fairly quickly, and it would depend critically as well on inflation expectations being well anchored, longer term inflation expectations being well anchored.
Well, I guess I'm looking at the out years here, and the fact that the policy path doesn't change at all, and inflation is unchanged in the out years also. Doesn't that imply you all have basically decided that there is no signal here, and that it's just we're back to transitory again?
So I think that's kind of the base case, but as I said, we really can't know that. We're going to have to see how things actually work out. And the fact that there wasn't much change, I think that's partly because you see weaker growth but higher inflation. They kind of offset, and also, frankly, a little bit of inertia when it comes to changing something in this highly uncertain environment. I think there is a level of inertia where you just say, maybe I'll stay where I am.
All right, there you go. Doesn't try to give too much information about how much of their the data taken into account is the actual tariffs for their inflation projections, but he says it's definitely not nothing. So if we recall, I believe we had our CPI report come in below the actual expectations. So the month prior, 2.9% inflation, projected 2.8% inflation, ended up at 2.7% inflation. So, gentlemen, how are we feeling about inflation on that front? Do we think tariffs is going to make it worse, be about the same? What do we think?
No, I think Jerome Powell kind of hit it on the head there. The inflation caused by tariffs. So he alluded to this a little bit later on the stream when a few others asked them about prior times in history where we had tariffs. And the base case, the reason why he said it, the base case is the inflation from tariffs are going to be transitory, is from those prior times in history. It was actually a really good question. He asked, hey, man, according to the SEP, it seems like looking outwards into 2026 and to 2027, everything seems to be still well anchored. And so is the base case that the inflation that the markets, both businesses and consumers, are factoring in based on the tariffs, like, is the base case that they're just, it's more noise, it's not really signal, and that they're they're going to be present, but they're going to go away and they're not going to affect their long-term expectations. And the TLDR that Jerome Powell said basically is that, yeah, they don't really believe that at the current moment in time, it's going to affect their long-term expectations. Number one, prior history, but also the fact that we only have about 2 months worth of data coming in from the current administration, and being able to parse out what part of inflation is coming from the tariffs when they're such a recent thing is a very difficult exercise to be able to do at this moment in time. And so until we get more data, until you actually get all of this stuff resolved, because remember also that when it comes to the tariffs, these guys have been wishy-washy. We went over this a few weeks ago. They're kind of sort of tariffs. They're on and then they're off, and then they're on and then they're off, and then they push the ball further down the road. And just today, we got some news of Donald Trump saying, yeah, I think, we're going to think about having reciprocal tariffs, but we're going to give them some, we're going to give them some leeway on other things. So it's all up in the air until we get something on April 2nd. Then as it stands right now, it's still, it's still uncertain is the TLDR basically.
Yeah, look, I think the interesting thing you asked about the tariff specifically, Zenith. That's the angle I kind of want to address. I think the reason why it's a bit of a nebulous answer on his part is there's only so many levers he can pull, right? Anybody in any position of power, there are things you can do, and then there are things outside of your control. As I see it, to try to simplify it, tariffs are going to affect the DXY, and the DXY's value is going to affect people buying bonds. And so that effect takes time to wash through the system. As a DXY sinks, people are going to make different decisions with their bond money, right? And they're going to allocate it differently. And that's going to cause some sort of cascade and shift into the markets. To what extent, to what degree, in what direction? Those are things Powell can't control, nor can he predict. And so I think that's why people instinctively know that tariffs are going to have an effect, but what that effect is, the market will decide, right? That's kind of my take on it.
Yeah. Also, it's when it comes to, so a lot of the stuff that Powell spoke about in this meeting, he said that, yeah, according to the surveys from businesses and households, the conclusion is that tariffs are going to be inflationary. But he also goes on to say that when it comes to the correlation between the hard data that they can actually measure and the survey data, that correlation is less tight. Actually, it's not super tight. So like households and businesses might say that tariffs cause inflation, but the data is not going to reflect that, right? Because the data actually reflects what the actions are. And so if they think these are going to be inflationary, but the buying continues, then it's not really reflective of their behavior, right? Because if inflation starts getting overheated again, then you would kind of expect the buying to decrease somewhat because people are going to look at the tickets on goods and services and they're going to be like, well, this is a bit higher. We're not going to buy it. But usually the behavior is opposite. So the correlation between the survey data and the hard data that the Fed actually gathers, at least from his statements in this meeting, they said a lot of the times they're not super tight, right? That correlation is not super tight, but they do have to consider it.
As we're having this conversation, something that occurred to me, if I were in Powell's shoes and I have the dual mandate that they have to look, in one big part of Powell's job is to examine the employment rate of the U.S. AI is the sword of Damocles hanging over that guy's head when it comes to the unemployment rate. I mean, it would not be a fun thing to be sweating and be responsible for accounting for. How do you account for it? You can't.
You can't.
And so that is certainly something that could very much tip the scales way more than tariffs ever will, in my opinion. And we don't talk about it like we talk about the tariffs, because the tariffs are the spicy news thing. But as we're sitting here thinking about it, it's like, man, what's going to move the needle more in terms of their stated mandate? It's the jobs.
Yeah. I think that's why their base case is always pretty much stable unless something really hits the fan. The reason why their base case when it comes to employment, when it comes to inflation over the long term is still pretty stable is because it's very difficult to parse out how the tariffs, how AI can affect the labor market, how the tariffs can affect inflation on the long term. And so very true to their behavior, at least this FOMC, right? This group of people is that they take things meeting by meeting by meeting by meeting. They never speculate too broadly on what's going to happen on how these short-term variables or short-term narratives are going to affect their long-term goals. On the short term, they might have something, but long term, they're like, no, here's our base case. In the long term, we don't see any short-term narratives affecting it too greatly.
That's one big reason why these meetings are they feel a bit repetitive, right? They feel a bit dry because they're only ever shooting one meeting forward. Absolutely. Yeah. That's definitely the case.
Well, just to go off of that, as far as AI goes, yeah, employment's going to skyrocket. I don't care what anybody wants to hear and tell me. Now, if you've got engineering degrees and you've got robotic engineering degrees specifically and AI engineering degrees, you're going to be booming because somebody's got to have to program those. But as far as factory workers and menial labor jobs, those are going to be obsolete. The scary thing was that some of the leaders in AI, they've been talking a lot, and the stuff that's coming out of their discussions they said that basically AI can basically do anything a human can do over the next 5-10 years, period. You don't think that's going to be a disruption? Shoot, that's going to disrupt massive amounts of employment across the board, which is why you're starting to have rumors of, that, we talked about on that one episode in Dace, we were talking about how, basic income is going to be, a thing. I mean, there's even a show on Fox now that's been airing since, last fall. I mean, you want to get into conspiracy theories on selective programming, but I mean, it's kind of crazy. You actually have a TV show out there that's talking about it like it's not a bad thing. It's like, Jesus. Yeah. You haven't seen that? You haven't seen the commercial for this? Universal basic income. Universal basic income.
Like first we get these infinite entitlement programs in never ed, and now you're going to add UBI to it. It's like, dude, adapt or stop complaining, man. Are social safety nets important? Yes, I think we need social safety nets, but to keep just piling on, like, stop babying the American people. Okay, technology is going to move forward, and AI might take over some jobs. Well, tough luck. Adapt.
Nice
way to adapt there.
Nice catch.
Ray Dalio, he was on about a week or two ago, and he was comparing that the certain climates we're dealing with. He compared it actually to 1930s Germany, as far as, you had basically a lot of write down on debt that they were pushing to try to get debt written off. This is one reason why you're seeing these tariffs, because they're using this as leverage to get a lot of debt written off with these other countries for them to basically fit the bill. And that's basically what's going on behind closed doors. And not people are talking about that, but that is really what its underlining is to get rid of some of this debt and make people in other countries take on that debt, whether they like it or not. And that's basically that's one of the big underlining factors of the tariffs. It's not just, trade wars and things of that nature, but it's how does the United States get some of this $32 trillion of debt off its balance sheets?
Speaking of adapting, Ray Dalio, I just posted a clip of his in the Agent Roundtable Telegram. He wrote a book called The Sovereign Individual. Zena, I think you guys have covered on book club before. It's a great book, but he also has been famous for being kind of anti-Bitcoin, and he recently has come out and said that he owed some and that it's digital gold. And so an example of a very smart man adapting.
I think Ray Dalio was the one that wrote the Changing
Fourth
World
Turning.
Order.
And the Fourth Turning.
And the Fourth Turning, yeah.
Gotcha.
Sovereign Individual, also a very good book, but different author, but very good book. I highly recommend it.
Let me see.
I can pull it up.
And if people who don't know who Ray Dalio is, he's basically self-made. I mean, he's like an investment, billionaire who just seems to know everything as far as trends, and all he ever does is applies. It's interesting because that lies in line with our thinking about how everything comes in trends and waves and patterns, and he does the same thing, like the rise and falls of countries. This is a common thing. Everything you're seeing is always repeated in history, and he simply invests in things that are disruptions. Whether you look at the technology booms, the various technologies, is no different than the industrial boom in the turn of the centuries. It's a huge disruptor. Are you on the right side of the investment aspect of it? He does see a lot of, AI being a major disruptor. So do a lot of other smart people on the investments. But they're comparing basically, and I know I've talked about this quite a few times, but that United States is in its final leg of the fourth turning, just like the Dutch Empire was, just like England's empire was, and so forth. So, and I'm still in the camp that we're moving into a world. It's going to be a world government. It's not going to be an individual country. It's going to be a world government. We can hate that all you want, but unless countries stand up to it, that's what's going to happen. I mean, they're already moving towards the IMF. We talked about earlier today, IMF taking on, now they're considering potentially moving Bitcoin into the world reserve along with the basket of other currencies it has. So that's an eye-opening look at it. And I think more and more countries could look at Bitcoin as being maybe that reserve and maybe start pegging fiat to the Bitcoin is a possibility. I don't know. I think at this point, everything's open for negotiations. And I don't think anybody really knows what's going to happen, except for just assuming the data points that are coming in to make those decisions. So we are in interesting times.
No doubt about it.
For the Ray Dalio cycles, I think it's a good theory. I don't think it's entirely holistic, but I think it's a very like 10,000 foot view good theory. And that one has 3 different cycles that are all kind of working together at the same time. What that book really talks about is trying to figure out when the global reserve currency is going to change or shift. And that event happens when all 3 of those cycles happen at the same time. You have an internal order cycle, an external order cycle, like world stage, and you also have an internal debt cycle. So when all 3 of those things change, they happen about like every 400 or 500 years. That's where you see the world reserve currency shift. So the last one we had was when we had the British pound change over to the US dollar. Before that, it was the Dutch kroner, I want to say.
Well, I don't know the kroner, but you're Dutch. That was correct.
The Dutch currency changed into the British, what is it, sterling pound is to put
Yes.
the Queen's English on
pound.
it. Yeah. So the internal cycle is talking about there's internal cycle within a nation, and then there's also the external cycle within the nations, kind of like jostling for power amongst each other. Then the internal debt cycle is usually something that's used by by one of the nations themselves. So let me see if I can pull this up.
Yep.
So this specifically is the cycle that it talks about. This is the internal cycle in combination with the debt cycle. So you have the new order, you have a rise, a top, and a decline. What we're seeing here is that we're potentially in the decline. If you look at it, we have large debts, printing money, internal conflict, and then loss of a reserve currency. I don't think
We're
we've
getting
gotten
very
there
close.
yet.
No, we're not. We're at number 15, I'd say.
Yeah, early stages possibly. One of the things he talks about in the book
Country
is
split down the middle.
That's a good point. One of the things he talks about is that it's not impossible to reverse course slightly, but he does say it's pretty much impossible to go back to the top and stay there again. You can kind of like start sliding, have a little bit of a recovery, then start sliding again. So it's possible that this could be figured out, but then there's only going to be the next conflict down the road and the next one and the next one and the next one. So that's what we're kind of looking at here. If we do get to a situation where the external world order cycle actually starts to shift and look like there might be a change in the balance of power, I know people are citing China and the BRICS countries. I don't know if I'm there yet. I don't know if I believe that narrative per se. I think the US and to some extent the EU still has a good, strong grasp on the world order when it comes to that kind of stuff.
No, I was saying more like I believe the UN, the BIS, the IMF are going to end up taking more power over. And that's what's going to, I believe that's the trend that we're going toward. And it's not going to be individual countries. It's going to be an entities like that have various nations involved in them to make more or less a committee of countries.
Yeah, I think that's a plausible theory. The other alternative case is actually the other book we've referenced, which is Sovereign Individual, which is that what we're talking about here is we're assuming that this trend or the continuation of nation states as the dominant sources of power in the world, that is going to continue. Sovereign Individual actually is a different theory, which talks about the idea that individuals are going to be able to amass power and wealth that will rival nation states. One of the great little aha moments I had was I was reading that book during I think it was like the first or second year of the Ukraine war. And a lot of people were trying to claim that Elon Musk was a traitor to the U.S. by him not giving Starlink to the people they wanted to give it to. And it's like, okay, this is a weird situation where this is one of those cases where an individual in charge of a private corporation and a private asset is now rivaling nation states on a power metric effectively. That was one of those things where I'm like, okay, this kind of theory is possible. It's a new theory that's going to require a shift. So I'm going to assume that the trend is going to hold until I get confirmation that it's broken. So based on that, I'm more in the Ray Dalio camp as opposed to the sovereign individual camp. I think sovereign individual has very, very good ideas. Specifically, I mean, the guy effectively created the idea, like did the a mental model for Bitcoin back in like the early 90s before the internet even existed. So I think there's a lot of credence over there, but I think Ray Dalio kind of, I got to give the tip of the hat to him right now.
It seems to me like we were, the world of crypto is happening in the microcosm of number 16, right? Where the loss of the reserve currency is getting diffused with technology in a way that it hasn't been before. That would be sort of how I would try to sort of blend the two concepts into what we're living through now, and to bring its own uniqueness, obviously, to something that they've built looking into the past versus the future we're moving into now.
I would agree. The emergence of cryptocurrency technology, it creates a new road that has not previously existed. Up until that point, we've been largely working with all the different systems of money up until that point. And in the last 100 years, we effectively went from something that was a subsidiary backed or commodities backed rather with gold to pure fiat. But now that we have a new alternative, it's going to be an interesting time ahead of us to see if this is actually adopted, if it's seen as purely a rival to governments and monetary systems that they implement. But personally, I put my money where my mouth is, and I think that this is going to be an emerging technology that is going to rival it and change the face of the earth. So that's why I'm in crypto.
Well, it kind of is if you think about with Bitcoin. I mean, think about they're trading in non-US dollars now. I mean, BRIC countries are doing it. I think it was interesting how the IMF kind of slapped El Salvador down, saying you need to chill out on the Bitcoin buying and everything, and they rightfully did so, or they were going to lose their AAA stat or their agency status. So they use those leverage to kind of bully countries around. But I think it's going to adopt, and it's already moving forward. Certainly Bitcoin is, and they know now they can't stop it. They're now accumulating it, and they're going to hedge their bets, and they're going to start to incorporate it and make sure they get their hands on it as much as they can. And they've been proving that over the last, aggressively, last 5 to 6 years, they've been buying it up pretty aggressively, even more so here in the last 3 years or so. But yeah, so that trend's going to keep going. But yeah, I think follow the smart money. Smart money's buying it. Tells you something.
That's true. To take the conversation back a few steps, though, you guys were talking about AI and the possibility of AI replacing jobs. One of the things that Jerome Powell actually talked about in the meeting was that looking at the unemployment situation right now, it's staying pretty steady around that like 4.0, 4.1% area, which he's previously talked about is a very healthy metric for a normal market. But one of the questions that got brought up to him was that, look, there's not a lot of firings right now, and there's not a lot of hirings. Is that the reason why we're stable? And he was like, yeah, it's pretty much the case. So there's a bit of a great irony, which is that the U.S. it's the U.S. and China. Those are the two leaders in the AI space. We're already seeing AI start to replace jobs, and I think the U.S. is exceptionally weak to this kind of possibility because we're largely a white-collar, data, tech-focused economy, and we've outsourced all the manufacturing at this point. So if anybody's going to get hit hardest by the AI revolution, it's a country that kind of looks like the U.S. pretty much. So curious to see if we actually start shifting that balance of hiring and firing, and if people start losing jobs thanks to AI. I think I saw a stat recently that the Harvard Law School graduate class, the last one, I think about 13% of them still are unemployed after receiving their degrees. I think this was like a 6-month study. And one of the largely cited things for it was that law firms are leveraging AI to reduce the workforce that they have. So highly educated people in this economy, which the U.S. is highly educated in comparison to the rest of the world, those are the people that are going to start to see the effects.
Yeah, look, I remember that part in Powell's speech, and he's like, we'll have to see which way it breaks, right? We're not having a lot of hirings or a lot of firings, and it's like, I got news on which way it's going to break, man. I mean, I don't know. That's how it seems to me.
Well, how about this? We'll do the bullish and bearish case. The bullish case is that tariffs work so well that it helps promote and stimulate new growth inside the United States economy to make up for some of the gaps and use some of that protectionary effect of a tariff to allow an industry to start growing. That would be the case for the bullish, which is that should theoretically spark more jobs and innovation and create hiring opportunities. The bearish case would be that AI is the bigger effect here, And the overall trend is that, yeah, we're going to see more firings and more layoffs because that's more business cycle as opposed to tariffs having this outside effect, because I largely think they're being used as bargaining tools right now as opposed to just tariffs for tariff's sake. So that's where I'm at.
Yeah, the other issue is so we all know how the unemployment rate is calculated. I know from our investment standpoints, investors are looking at what the Fed's reporting on, of course, right? But we know that they're not including people who stop working. So specifically, people who stop actively looking for a job after 4 weeks, they're not even considered part of the labor force anymore. 4 weeks. That number just keeps dropping. It used to be months. Now it's only 4 weeks now that they drop those numbers out. So they're padding the numbers again, and they keep doing that. And honestly, the numbers of actual unemployment in the United States, it's tough to gauge, but it's somewhere between 12 to 16 million people are unemployed right now. Now, whether or not they're looking for jobs or not, it doesn't matter. But still, those are actual people that could be working. Now, could some people be incapable of working? Things like that, that could be also calculated into those numbers. But the unemployment is always a lot higher than what they're simulating. Just like they determine, the baskets for inflation, how they cherry pick what items they're going to use of the 60 items they can choose to determine what the inflation rates are. So from an investment standpoint, you want those numbers to look good, of course, but how bad is the underlying fundamentals that are being hidden behind closed doors? That's the stuff you got to kind of look at too. How bad is it really?
Good. Alrighty, gentlemen, let's cap off our Federal Reserve chat real quick with looking at the data for the upcoming months. So going over to CME Group for our FedWatch tool, we are now 43 days out until our next FOMC meeting. And as it stands for May, well, there's a 91.5% chance of no rate cut, similar to no rate cut this month. And then only when we get out towards June do we actually see the rate cut as the highest probability. This 5.2% does exist because it also assumes a rate cut this next time before we get to that second meeting, but you can largely ignore that one for now. What we're seeing is that June looks like the timeline that we're going to get a rate cut. And in the press conference, Jerome Powell did get asked about 2 rate cuts for the year, and he stood by it. Didn't say when, but he stood by 2.
And they only stated they were going to be just quarter point cuts is what they're expecting.
I believe so.
They did not say. They will never say. They could do 50 points in one meeting. They could do 25 in 2 meetings, but they will never actually say when and how much they're going to cut.
I guess what I'm saying here, it's speculating there's going to be a quarter of a point.
Most likely. It's most likely going to be a quarter. Yeah. Something that's more interesting that I actually realized when you compare the SEP from December to the SEP now, we know that they're still projecting a total of 50 points decrease this year, right, from the Fed funds rate. But if you actually look at the dot plot says that there's less FOMC participants that said we should cut 50. So it's the median is still we cut 50, but less of the participants this SEP said we should cut 50 than it was during December. So if you look at the finer details, this SEP is actually slightly more hawkish than the December one. So, but obviously, most people don't pay attention to the tiny details, because I guarantee you, if the market paid attention, like, whoa, you mean to tell me that less of the FOMC participants said we should cut by 50, even though the median still said 50, the markets would have tanked. But obviously, they don't look at those. I mean, who wants to see this, bro? What is this, Braille?
We're reading Braille. That's how we determine the interest rate. Jerome Powell goes outside, reads the sidewalk for signs. Then that's how we get it.
Don't forget, 2017 Bitcoin bull run was in the middle of rate hikes, not cuts. Just saying, sentiment's a tricky thing.
True. It's very true. As far as inflation uncertainty, PCE inflation, a little bit higher, weighted towards the upside. Core PCE, same story. The outline for the dotted lines is the last one. The blue boxes is the new one. So slightly higher risk of inflation is what they are projecting, but it's not that much, to be honest. Mm-hmm. They pretty much convinced 4 people out of what is it, like 21? There you go. Alrighty, that is enough of that. Let's talk about a bit of a win for DeFi. From CoinDesk, we have the U.S. government removes Tornado Cash sanctions. Tornado Cash was sanctioned multiple times over allegations of helping the Lazarus Group launder funds. That is the North Korean hacker group. Are what to know. The U.S. Treasury Department's sanctions watchdog has removed Tornado Cash, a crypto mixing tool, from its global blacklist, overturning previous sanctions due to a federal appeals court ruling. That one came out back in late November of 2024. Over 100 Ethereum addresses are also being removed from the specially designated nationals list, which the Treasury uses for maintaining the blacklist. Despite the removal of Tornado Cash from the sanctions list, Roman Storm, one of its co-founders, still faces a criminal trial this July over his alleged role in developing the smart contracts and protocols. There you go. Bit of a win, gentlemen. Is this are we reading too much into this one, or do we think this might be a good data point in turning the tide against the war against DeFi and crypto?
Yeah, look, I think it's a great thing. I think privacy is a big issue when it comes to crypto. I think this is an acknowledgement of the government that permissionless software, right? Open source software that can't be tracked back to any sort of centralized location exists. It works, whether they want it to or not. And so they're taking a bit more reasonable stance on it is what this outcome looks like to me. And that's a good thing for everybody.
Mhm. Yeah, I think it's unfortunate that this hasn't had any positive developments for Roman Storm. Hopefully it does, because I think the judge presiding over his case is Judge Faya, and I think she also presided over the Coinbase case. So with any luck, rational heads will prevail. And like we mentioned yesterday during the DRT stream, you shouldn't. It's probably not a good. It's probably not good to judge the creator of a software based on how other people use it, because then you'd have to apply that rule to all software, and a lot more people would be in trouble, and they would be in a very similar position as Roman Storm. Zuck would be in trouble. Musk would be in trouble. Dorsey would be in trouble. Google would be in trouble. YouTube would be in trouble. A lot more people would be in trouble if we applied that same standard. And so I don't think Roman should even be in trial. He shouldn't be subjected to it.
I believe it's obviously it's a great thing, but once again, it's anything that's a threat to the traditional financial banking system is going to be absolutely beat down with a stick until they can ensure that they've got a handle on this. My question, though, is that I'm curious about. So now that they're letting these things starting to breathe and they're releasing their founders and getting going, are there any? Has there been any manipulation behind closed doors that they got to keep certain records or certain information? We're never going to know that answer. That's the only thing that I don't know about. So so for example, if you use these Tornado, let's say you use a mixer, any mixer. I know before they'll start looking at wallets as considered dirty. So if you used a mixer, you're now a dirty wallet. Now you're not allowed to offboard that money, and that wallet might as well just be burned because you're not going to be able to offboard it. Is that going to now change? So if I use a mixer, am I going to be able to do what I want? I don't know.
Because you should be able to, because it's now been removed from the OFAC sanctions list. So
oh yeah, I agree. You should. I'm just curious to know if this is good. But that's the other thing. Now today, maybe you can. Maybe down the road, oh no, you've interfaced with a mixer. You're no longer this. You're not allowed to offboard this fiat. You don't know, because the landscape changes constantly.
No retcon. Not like that. Not like that. That's not
serious?
like that. Yeah.
Yes.
No retcon.
Yeah.
What are we talking about? Just because you use a software during the period of time where OFAC removed it from the sanctions list, they're gonna look back at that history and say, no, sorry, like you did it, so we can't do business with you. I'm like, well, it wasn't illegal back then.
I agree with what you're saying, Jay. You're being rational though. you're using logic in your thinking though. That's the problem. If people it's a loaded thing. You're not going to ever know if that becomes a problem. But here's the thing. We've talked about this before. You could own gold in 1930s. You were not own gold. So who knows? That's all I'm trying to say is, like, we don't know. The landscape's changing so constantly. You don't know. Who knows? Next administration comes in and be like, sorry, executive order, not allowed to use this anymore. You don't know. is what I'm saying. That's the problem. Now, my thoughts are, yes, you should be able to use all this stuff. But once again, if it becomes a threat to the financial institutions, they're going to shut it down, regardless if it's legal or not. That's only I'm getting at.
The
I would
government would
like to use
never.
it, but I don't know if I can feel confident in using it. Is really
Never.
what I'm trying to get to. I don't know if I'm confident to use this, because if I do it, if I were to use a mixer, are you now tainted? Because they've already proven that they'll do that already. So are they going to come back and tell you later on, oh, sorry,
The government doesn't
go
keep
off board in
private.
another country, not United States?
They don't keep private lists on People Tracker. What do you mean? That's never happened. Never in history. Never, ever, ever.
With quantum computing and AI, everything's going to be possible. But
That's
what I'm
so
getting
bad.
at is, it's one of those things. I'm glad it's happened. I think there's no way anybody should be in jail for writing software that is a tool that people can use. This is like the gun debate, right? Should guns be banned? Should they not be banned? And here we go down here. Like, great. So somebody runs a crowd of people over with a car. Okay, now cars should be banned. I mean, you can't stop, and you can't stop crazy. You know what I mean?
That's why it's such a positive sign, right? Because it's a temperature
It
of the
is.
average
It is.
sentiment of our governing bodies, right? Of the movements that they make. And they're more in favor of Jay's reaction. That's what this
Yes,
action says.
I
Is
know.
that
And
they're more
I
like
think
Jay
it's
than they
great.
are like our conspiratorial takes, even though that historically we have some ground. And so
Right.
it's an interesting place to be in on this topic for sure.
I just think if you've been in crypto this long, we've been beaten down so much that even things that look positive and great, it's still like, okay, yeah, but what's the catch?
No doubt.
But yeah, no, it's obviously it's a great story, and I'm glad he got out. I mean, I think that's disgusting that anybody, and the same thing with the Silk Road founder and so forth. I think it's crazy that you're throwing these people in jail for stuff because they've
dude,
created a market. And
reading Ross's timeline, it's so wholesome. The guy is just, every day he posts something, it's just full of gratitude. It's a wholesome read. If you go on Ross's timeline and you read his Twitter posts, it's like one of the most wholesome accounts on crypto Twitter, which is crypto Twitter is where civil discourse goes to die. But his account is definitely a bright spot. That's for sure. Just always full of gratitude.
There you go. So let's see here. Just to wrap it up a bit. So Tornado Cash, Roman Storm heads to trial in Blockbuster crypto case coming up on July 14th in Manhattan. We are looking at conspiracy to launder money, conspiracy to violate sanctions, and conspiracy to operate an unlicensed money transmission business. He faces up to 45 years in prison. So on the face, the conspiracy to violate sanctions. That one is actually the most likely one to fail.
Yep.
Now that we have the ruling from the Fifth Circuit Court in Texas saying that, the sanctions don't work. It's not. You're trying to call this stuff property, and it's not actually property. Conspiracy to launder money and conspiracy to operate an unlicensed money transmitting business. Those are going to be the two big ones.
define money. You got to define what money is there.
I think
also
so.
true.
Z, I think the most likely one to stick here, if I were to take a stab at it, it's probably conspiracy to launder money. I don't think operating an unlicensed money transmitting business will stick, because we've had those charges dropped, not to other mixers, but to entities like Coinbase, like Uniswap, et cetera, et cetera. I don't think that sticks either. I think the money laundering thing is probably going to be their it's the one that they have that they have the best argument of sticking to him, most likely.
I would agree with you on that one. We've seen the money transmitting businesses charges dropped largely in a lot of the other cases, so decent chance it could happen here. Conspiracy to launder money. I think at the same time you're going to have to really prove connection, and I'm very doubtful how many connections this man has to the North Korean hacking group who they're primarily going after on this one. So to me, that seems like a bit of a big ask, but at the same time, don't go to trial unless you know you're going to win. And even then, anything can happen pretty much. But there is another interesting section down here, though. It talks about Trump allies say charges never would have happened under his watch. The case was started under the Biden administration, but it's now being brought forth in a different political environment. Several of Roman's supporters, including top players in the crypto industry, say this prosecution wouldn't be happening if Donald Trump had been president back then. They want Trump to shut the whole thing down.
You know what we should do? Know what we should do is, if Roman goes to prison for this, send a message to Donald Trump. Hey, we need you to pardon Roman.
Yep, you can either pardon or commute the sentence.
I think he'll pardon him regardless, just because just on what he stated here. Now, maybe they might want to let this play out to see what they may learn from the case. That might help set some guidelines potentially from, like, say, the crypto community and things of that nature. But yeah, I expect him, if he gets found guilty, he'll probably get pardoned and get dropped. My next question would be like, cool. So if he's going to jail, who from JP Morgan's going to jail for their money laundering?
Oh, we will. Those are dangerous questions there, my friend.
I mean, and not just stop there, but a lot of the financial institutions. I mean, what about the whole LIBOR scandal that occurred during the 1990s? That was one of the largest scandals in U.S. I mean, the whole world financial system, cutting rates, undercutting it. How's that not money laundering? I mean, once again, it comes down to the institutions.
Look, you're not wrong. But at the same time, can't really relitigate everything in the past. But you do raise a very valid point, which is that this is an opportunity for the new administration and the new Department of Justice specifically to look at what are you trying to target with your prosecutions. Is this something that's worthwhile continuing, and what it kind of means for the rest of the industry moving forward? We alluded to it earlier in the show, talking about how it might be pro-crypto this administration, but the next one might be anti-crypto. Unless you start getting these things codified in law, and you're actually getting good rulings and case law around it, that's how you get things to stick longer than just the whims of whatever powers in play at the current time.
Well, and that's another reason to let this play out, right? To give the courts the opportunity to set a precedent that's positive in the right direction before you have to step in and sort of redirect the course.
Agreed.
Bright side is if we somehow shift from red to blue again, next administration, a lot of this stuff would have already been litigated within the crypto space. And so we would have some precedent set for the next administration, just in case the pendulum swings once again to the left. Doubtful, though. Their approval ratings right now are hovering around 20%. Not good.
It's a lot can happen in 3 years. I'll just say that much.
Yep. They're doing so bad that Snow White just dethroned Dragon Ball Z as the worst live action adaptation in IMDb. That's saying something, man.
Yeah, taking a nice $300 million bath on it while you're at it.
Mm-hmm.
Alrighty, gentlemen, we are coming to a close on the show here tonight. Want to go around the horn one final time and ask you for your final thoughts about anything we talked about here tonight. So, that being said, Dace, what you got?
Great show. I really enjoyed covering this stuff with you guys. Like I said, some of these things occurred to me just as I'm here talking through it, right? Sitting here talking with the friends. Iron sharpens iron. That's why we're all here. So happy to join you guys.
Love it. Agent J, over to you, good sir.
In terms of the markets, short-term bullish until proven otherwise, even though bears still have momentum. But short-term, we are feeling bullish. Big W for common sense regulation, big W for crypto when it comes to Roman Storm. So I know people are getting impatient because of price, but you have to look at a broader context. There's so much progress being made here in the West. I would just like for people to just imagine this picture. There's a tree in Japan. I'm not exactly sure what kind of tree it is, but it spends years digging its root system down into the ground, deep into the soil, and then suddenly it goes from tiny into a large, healthy tree. And so think of the current market as that. The crypto industry is digging its root system very deep into the West right now, and it might seem like nothing much is happening, at least in terms of price, but then suddenly you get those kind of green candles to the upside. So just be a bit patient. Overall, it's a positive thing what's going on in crypto. I know not everybody likes the fact that decentralized entities are getting into it, but net balance, it is positive. So just be patient.
Well said, sir. Tracker, what you got?
Just for anybody who's curious, I would highly, everybody talks about the financial crisis. If you're not familiar, just look up quickly on the LIBOR scandal just to see what it is. They're in charge of $350 trillion worldwide. And there was and I think that huge scandal that went down, the whole process, 2 people out of the entire world went to prison. That was it. Just saying, take a look at it. They made it so dry during the bank hearings that I think the jury was falling asleep because they made it so dry, and it was very dry. But it was crazy because that happened in 2012. The financial crisis happened in 2008, but this was glossed over. This was just glossed over. Like you really should go look at the LIBOR scanner. It's crazy to see that, and only 2 people went to jail. So, the reason I bring this up is a lot of these things have always happened, and a lot of stuff you're seeing is you have a very friendly administration that's now starting to open up the world to crypto to the masses. And yet, but once again, if you think that I'm being in a conspiracy about all this stuff, but unfortunately, the banks will always suppress whatever's a threat to them until they have a good understanding of it and have their hands around it. And that's why you saw spot ETFs now being released. So now TradFi's got their hands on it a little bit too. So just saying, take a look at the LIBOR scandal. Very interesting.
That's definitely gonna have to look into that one. Folks at home, I gotta say, I think we're gonna have a critical inflection point in the markets coming up here in the next few weeks that are gonna tell us what the market wants to do for the next few months afterwards. Today was a great day on the charts. We got that first confirmation above the 20-day moving average. If we can get a second one, I think we're going to be continuing to head in a good direction. So outside of that, please stick around, stay up to date, stay informed on everything going on. And by the way, if you want to do that, you can head on over to our website. Link is down in the description down below. This is the Walk the Block Navigating Digital Finance website, walktheblockndf.com. This is where we're going to be posting a lot of stuff we put out, and also head over to our socials. Over on X, we have our Twitter account here. It's where we post a lot of good information and give you updates on the shows coming out as they happen. Outside of that, folks, thank you so much for joining us here tonight. We are very, very pleased that you have been spending your time here with us tonight and navigating the digital financial markets with us tonight. A lot of good stuff coming up in the near future, so please stay tuned, stick around. But until we catch you guys next time, hope that everyone out there continues to have a great week and have a good night. Adios, gang.